or DMART as we know it is in focus on the back of its earnings. It looks optically like a strong set of numbers, but we'll call it a mixed bag, and here's why. Let's take a look at the revenue. Standalone revenue has come in at 17,613 crores, slightly below the street's estimate. Net profit, EBITDA and EBITDA margin are a beat versus the street estimates. Net profit has come in at 923 crores. EBITDA has seen an uptick of 20%. EBITDA margin have seen a very good expansion at 8.4% compared to 7.9%, which is up 48 bips on a year-on-year basis. But a lot of this profitability boost and EBITDA margin expansion has come from strength in underlying gross margins, and that has happened because of the discounts given to DMART by FMCG retailers to account for that GST rejig, and also a lot of one-time discounts on the back of the GST rejig that have come. So that has been favorable for DMART and its gross margins. But how sustainable is this going ahead? That is going to be a key factor to watch out for, because there has been deflation in staples as well. So watch out for how this trend shapes up going ahead. Other than that, let's talk about some highlights. The like-for-like growth has trimmed down or has come down significantly at 5.6% compared to 6.8% in the previous quarter and 8.3% on a year-on-year basis. So big moderation over there. On the flip side, the store addition pace has once again picked up slightly. It looks healthy. 10 stores added in quarter 3, 27 added in the 9 months of the financial year so far. Revenue per square feet is down very nominally on a year-on-year basis, but up 7% sequentially. And this higher PAT, like we told you, is aided by gross margin expansion, which has come in at 14.6% compared to 14.1%. The other important news flow here is that there's been management rejig, because the current MD and CEO, Mr. Ignatius Neville Narona, is going to be completing his term on the 31st of this month. The current CEO designate, Anshul Asaba, will be taking over as CEO from 1st Feb and as MD from 1st April for the next 3 years. Let's take a look at what the brokerage view is on the back of these numbers. Goldman Sachs maintains its sell rating, but has hiked the target price to 3,500 from 3,355 earlier. Macquarie maintains underperform, price target maintained. JP Morgan maintains neutral, but has cut the target price to 3,950 from 4,350 earlier. Jefferies has maintained its hold rating. Morgan Stanley maintains equal weight, and Nuvama has maintained its hold rating, but has cut the target price to 4,351 from 4,580 earlier. So mixed bag, mixed review coming in from brokerages too. But yes, optically, it looks like a good set of numbers for DMART, but the like-for-like growth has weakened, and all eyes are going to be on how the gross margin trajectory shapes up going ahead.